Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Monday, and we're at the 29th of July, almost over with July 2024, and the time right now, well, we're getting on to 6:50 p.m. Central Time. In the evening trade, we're down in all the stock indices, but you know this has been a whipsaw recently. If you were watching today and you left your chair and you came back an hour later, you didn't know if you were up or down in the S&P or the NASDAQ. They were going back to unchanged, to lower, good and lower, then they'd roar to the upside. They were gaining all day long, though, against the Dow and the Russell. There's a little bit of evening up in front of some of these reports. Now, we do have a lot of data coming out tomorrow, and let's take a look at it. You're going to have the Red Book Group come out with the U.S. retail sales, and that's at 755. Case-Shiller, the 20 metro area home prices, will come out at 8. They've been on a tear to the upside, not sales, but home prices just keep advancing. U.S. Federal Reserve begins their first day of their two-day meeting, culminating on Wednesday, when at 1 o'clock we'll get the monetary policy announcement, and then 30 minutes later or so, we will get the beginning of the Fed press conference that lasts about 40 minutes. The Conference Board, U.S. Consumer Confidence Index, will be released on Tuesday morning at 9, and a big number is going to be the JOLTS, Job Turnover Survey, and that comes out at 9. And to cap it all off, we get the API numbers coming out at 3:30. And then we have a lot of data coming out on Wednesday with this meeting with the Bank of Japan. We're going to have this week ADP, Challenger Gray, and we culminate on Friday, U.S. jobs report. There is something for everybody here. Now, the market widely expects a September rate cut. Some now, the different brokerage firms are saying 3 cuts. We'll get 3 by the end of the year. You know, every time they've done that, they've gotten ahead of themselves. Remember, we were going to have 6 this year. We haven't had any. So now they think they'll make up. The economy has to turn sour for the Fed to want to make up. So far, the data is softening, which is exactly what they wanted, but souring is a whole different word. Now, what would spook the market is Friday if you saw the unemployment number jump over 4.2. Actually, 4.2% could be spooky in itself, another tenth higher. But over that, yeah, that would probably get the Fed really concerned that the labor market's coming in way too fast and too much. Going back at 4.1 where it's at now probably keeps them very comfortable that as long as inflation falls, they can make those cuts. All right. Energy markets, we saw that the Biden administration today announced in the afternoon they did, in fact, use that tender to buy crude oil for delivery later this year, and they got it at prices they wanted, under $77 a barrel. Great trade, Joe. You should be a pro trader. You did a good job on that one, by the way. On the metal markets, okay, a little mixed bag here. Same thing in the currencies. They're all waiting to see what the Bank of Japan's going to do for one part of it, for Asia. But the big movers, what does the U.S. say? And then on Thursday morning, Bank of England. You got your hands full. There's a lot of data coming out right now. When we take a look at the S&P 500, we're down so far for the week. 0.25%, not very much. Support's back at the 53.61 level. I've mentioned that over and over. On a closing basis, that is the 18-week average of closes. Looking at this chart, there's nothing bullish here. You've got waves to the downside. Lower highs, lower lows. Very clear cut. The market's resistance should be the 55.9275 level, the 18-day average of closes. If you get a market that thrusts to the downside, 53.81 is the 100-day average of closes, and the Bollinger Band's 54.34. Now, you've had your first bounce away from the Bollinger Band, but not in a decisive manner, and you are staying oversold in the market. Where's the big support? Probably the combination of the Bollinger Band right into the 100-day average. In the NASDAQ, you came down once already, challenged the 100-day average in the Bollinger Band, bounced and came back. But now something else is happening here. Look at the slow stochastics. You cannot count Tuesday. So let's, if I could, get the charts to go back a bit here. They don't want to give me what I want. They should. No, it's not going to let me. But I think this is what's moving. What we have here is a market that is embedding. Embedding is when momentum locks into a pattern. And when markets are going sideways under 20 for several days or more, it's said to be locked in. I use the word embedded. And until the red line closes over 21, the odds favor that on rallies, and there is a moving average that I don't show here, I show it in my morning subscriber video, the traders sell into, looking for the market to come back to this combination. We'll see if that's still at play. In the Dow, you have a market that is corrected, past tense, not a trend. You have a higher high, a lower low. The bias is held on each challenge so far of the 18-day average. The market has stayed up, and it has done the same in a nice way in the Russell, and they're both giving ground right now to the other indices as you're getting traders playing games with their portfolios. My guess is, do they trim back a little? How do they want to go into the next government report? In the bonds and notes, I could make an argument in the 10-year note for resistance at the upper Bollinger Band, but the trend is certainly up, and the same as in the 5-year, and we're down to 417 suddenly in 10-year notes today. That's an impressive number. Will we crack 4? That's what traders want to see. In the dollar index, what has been now resistance is the 100-day average. You can see how this number came in at key areas and played with the market, offering support levels. Got that? Now, what was support is resistance as the market stayed under it, and it's got to prove it can get back over it with verve in order to say, nah, I'm going to get away and make that support again. You're not at that point yet. The trend is up. The bias is up. You're into a resistance point. If you can clear that and get some good news, wherever that Bollinger Band comes in, and it will drop tomorrow, that would be the next resistance point. In the eurocurrency, it's the flip-flop. The trend is down. The bias is down. You're oversold. If you continue the decline, look for the 108.20 area, the lower Bollinger Band, to be your support. Resistance comes in, actually support comes in right here at the 200-day average, literally where you're at, all the way up to the 18 at 108.92. So interesting time in that market. In the British pound, what are the Brits going to do? Is the Bank of England going to cut rates or not? This has been one of the strongest gaining currencies against the U.S. dollar this year. I thought it might be the yen the way it's recently come, and then I went AI and so on. Bloomberg graphs came up and showed it's the British pound since the first of the year. I wouldn't have guessed that, and currency is my favorite market, but that's what it's been. It's currently in a downtrend. Today's high is very important. You have an outside day down. So when you have an outside day down, 128.94 is that number. Until it's taken out, the pros will sell the market. Now, I don't see a spot to do it. The 18-day average is 129.04. That'd be over that high. So I don't see how you get that done, and you're oversold. I consider anything in a market when you have momentum under a 30 level in slow stochastics as being oversold. In Bitcoin, tell me that you don't see what the market's playing at. Here's your combination of the 100-day average and the Bollinger Band. That's where I thought the pros were taking money off the table. You've literally gone nowhere in the week and a half since I said that. I know you probed higher and you got that exact high, and that would be phenomenal. But you're playing games here. You're not trying to be embedded. It's a difficult one. On the energies, we keep falling. Now, this is good news for the Fed because the headline numbers are going to show a market that has been coming down. Remember, we were at 87. We're down $8 a barrel on this right now. That's important. And if Brent is down, what do you think WTI did? $8 a barrel down there too. Well, that translates into what? Inflation or deflation? Deflation right now. prices coming down. Gasoline peaked out at the beginning of July the 4th and has been just coming down all the way through there. And I mean, it's one heck of a decline that it's been marching on. It's been oversold for the longest period of time. All the decline happened 1, 2, 3. You can see it here. And this market got to the 100-day average, stalled, and then the break, a secondary break happened. And now you're fighting at the 200-day average in the Bollinger Band to decide, is there more downside or not? In natural gas, the chart action's bearish, and you're developing that bearish embedded reading. I think the pros are looking to go short this market on rallies. They'll bail if you don't get the embedded reading. So you can't count tonight. Let's see if I can get the chart to go back at all. Yeah, there it's going. But we can count Monday. Both numbers are under 20. We can count the day before. Friday, both under 20, and the day before not. So tomorrow is the key day in the market. You need 3 days to convert from oversold to embedding. Most times it doesn't do it. I don't know. The chart action looks pretty bearish to me right now, so we'll see just what it wants to do. Now, I want to remind you that we offer an awful lot on these information days. We cover in detail and send out emails galore. Here's the report. Here's the analysis of the report. Here's what option trades look like in it, futures trades. We have a whole crew of people writing reports all through it, charts of the day. So we'll take a chart and we'll put on what we call our proprietary indicator, which is a price count. And a price count, think of it this way. It's a mixture, a hybrid in some ways, of a swing line combined with a Fibonacci count. We don't share with you the formula, but we let you use our charting software to use it. And you can see how it's done. We have a small course on it. All this is in here. So how do you get this? Just go to iraepstein.com, free offers. You'll see it on the top left, or move your cursor up there. Sign up for as many as you want. We'll get them out to you right away. I'm Ira. Lot to talk about over tomorrow night for sure. We'll see what these markets offer us during the day, and I'll see you in the morning as we start discussing what the early morning reports look like. You have a great trading day.